Good morning, everybody. This is David Grossman, the Mortgage Mensch. It is September the 12th, 2007. Thank you very much for tuning in to my broadcast today. The title of the broadcast is What to Do If You're Trying to Get a Mortgage and you have an income shortfall from a bank's perspective. There's a number of issues around this, and first thing is that we have to understand what is the reason why. If there's an income shortfall, is this because you're self-employed or is it some other reason? There are products for people who are self-employed, mortgage products, because it's understood by lenders that people who are self-employed will make every effort to write down their income for tax purposes so they don't have to pay as much tax. And as a result, they've designed products, and there are different products, but basically you can get a mortgage with as little as 5% down if you are self-employed. There are various credit requirements as well, and there's different programs available. There's a new one where actually they don't even ask you for your notice of assessments, because in the past most lenders wanted to see your tax filings and your notice of assessments at least to confirm that there were no tax arrears. But now there's a new program that so if you don't have your taxes completed, then getting a mortgage is still a possibility. The credit requirements are pretty strict, especially with a low down payment. And with this type of a product, you can get a very good mortgage rate. The insurance premiums are a little bit higher than normal insurance premiums. The idea is that you don't have to prove income. They do want some form of proof that you've been in business for at least 2 years. That could be T1s showing that there is business income, could be a business license, articles of incorporation, GST returns. So there are other forms, and all you really need is one form of proof. Okay, now if you haven't been in business for 2 years, let's say you've been in business less than 2 years. Well, if it's close to 2 years, or if you've been in the same line of business for a while, we can still try and get your mortgage approved using this program. At least we can show that you have a high probability of success because you've been in the field, if not in the business. So we can make an effort to do that. Now let's say you're starting a brand new business and you don't have 2 years history. Well, that becomes a little more difficult. If you have good credit, it can still be done, but you will have to pay a higher interest rate. Now, what happens if you're salaried and you do not meet the income requirements? Well, it can still be done. Again, you'll have to pay higher rates depending on the amount of your down payment. If you have at least 25% down and you have very good credit, there's a good chance we'll be able to get you an approval at a fully discounted mortgage rate. However, if you have less than 25% down, it becomes a little bit more difficult, but it certainly helps if the credit is good. And the more documentation you have regarding your tax filings, business license, proof that you're in business, if you are reporting business income, all these things will help, but are not absolutely necessary if you have at least 5% down and if you have good credit. So that is basically what I wanted to say to you today about the, let's call them no-income qualifier mortgages. And thanks for tuning in, and I hope you have a great day. If you have any further questions, please feel free to call me, email, or write. Take care now. Bye.